All right, this is gonna be part two of the order blocks. So to save time, I went in and I put all the order blocks up from this point up to your current day. And what we're gonna do today, we're gonna go through. We're just gonna break it down. We're gonna add the indicators, and we're gonna look at the order blocks with the indicators and the TDI, and go down in 15 minutes, start talking about entries and all that.
Okay.
So starting from right here, you got an order block right here. So at first I'm gonna walk you through all the order blocks and explain why I boxed them up. All right.
Problem.
And then we're gonna go through the order flow.
Mm-hmm.
So this green candle right here is your last bullish candle before your lower low was created. So
Mm-hmm.
that's your order block. This green candle was your last bullish candle before your lower low down here. So now this is your order block. Last bullish candle before your lower low right here.
Mm-hmm.
Order block. Last bullish candle with the wicks before your lower low. Order block. Um, we're gonna go through the breakers and source after I go through the order blocks.
No problem.
Last bearish candle, because now we going up. Last bearish candle before your higher high, order block. Last bearish candle before your higher high, order block.
Mm-hmm.
Last bullish candle before your lower low, order block.
Yep.
Last bearish candle before your higher high, order block. Last bullish candle before your lower low, order block.
Yep.
Last bearish candle before your higher high, order block.
Yep.
Last this box is supposed to cover this candle right here. This is gonna be your last bullish candle before your lower low, order block. Last bullish candle before your lower low, order block.
Yep.
Last bullish candle before your lower low, order block. Last bearish candle before your higher high, order block. Last bullish candle before your lower low, order block. Um, you actually got another order block right here. Last bullish candle before your lower low, order
Yep.
block. You don't get another order block until right here. Oh, no, I'm lying. I was right. Last bullish candle
Makes sense.
before your lower low, they gap down, order block. Last bullish candle before your lower low, order block. Last bullish candle before your lower low, order block.
Yep.
Last bearish candle before your higher high, order block. Last bearish candle before your higher high, order block.
Yep.
Last bullish candle before your lower low, order block. Last bullish candle before your lower low, order block.
Yep.
Um, Last bearish candle before your higher high, order block.
Yep.
Last bearish candle before your higher high, order block. Last bearish candle before your higher high, order block. And that's it. All
Yep.
right. What we gonna do is we gonna go through and we gonna mark up the breakers in the source.
No problem.
All right. So right here, so you got your order block. We expect price from this order block before it turned yellow. We expect price to come back, retest, and drop. Right.
Yep.
So what happened was they came back up, played around the order block, and broke up, making this your breaker. It broke the order block going the opposite direction. So now this is your breaker, right?
Yep.
That's your breaker, and this would be your source. So now from you got your breaker, you got your source. Off of this break, we expect price to pull back to the breaker or to the source and rise, right?
Okay.
It pulls back to both and get up out of there. Then you get another order block right here. We expect price to pull back to the order block and rise. We don't get a pullback. We just get a straight rise.
Yep.
You get another order block right here. It breaks. We expect price to pull back and rise. It does that, but then it breaks right here, making this order block.
Break.
That's our breaker. The candle responsible for the highest high becomes our source. All right. Off of this break, we expect price to pull back to the breaker or the source and continue to drop. Right here, it pulls back to the source. I mean, not the source. It pulls back to the breaker, the
Yep.
yellow box, and it drops. It creates a new order block. We expect price to pull back to the order block and drop. To do that, right here, pull back and drop. Gave you about 104 pips.
Mm-hmm.
Then it broke the order block with this close above the order block, making this your breaker. And then making this down here your source.
Yeah.
I'm gonna talk about why I drag my source boxes all the way across when I get done marking everything up. So now you got your source, you got your breaker. We expect price to pull back to the breaker or the source and rise. It pulls back to the breaker, then it rises. It gives you another order block right here.
Yep.
This rise goes right up to this previous source. Then breaks the order block, making this your breaker. Making this your breaker, giving you another source up here.
Mm-hmm.
Now you got a source within a source. See that?
Yeah, that's pretty solid.
Right? Now after this break, we expect price to pull back up to the breaker or to the source and drop. It pulls back up to the breaker right here, and then it drops.
Yep.
Gives you another order block. We expect it to pull back up to the order block and then drop. Pulls back to the order block and drop. Gives you another order block. Same concept, pull back, drop. Gives you another order block right here.
Yep.
It breaks. So now this becomes your breaker.
Mm-hmm. See that wick down there? That's your source.
And the wick down there is your source. Then you got your source right there.
Yep.
Source, breaker. We expect price to pull back to the breaker of the source and rise. It pulls back and wicks the top of the breaker and the source and get out of there, right?
Yep.
You got another order block right here. It breaks, turning this to your breaker.
Yep. You got another source within the source within the source.
Then you got another source within the source. Now we coming down.
Mm-hmm.
We expect price to pull back to the breaker of the source. It pulls back to the breaker, then it drops, right? It gives you another order block right here. We expect to pull back to the order block, drop, broke, pull back right here, drop, right? Within that, it gives you another order block right here. We expect price to pull back to the order block and drop. It dropped right to our source, and then it consolidated.
Yep.
We got two sources down here, and it consolidated in both of them, right?
Mm-hmm.
It violated this source and created another order block right here. We're expecting price to pull back to the order block, retest, and drop. Instead of pulling back, it gap. When it gapped, it gave us another order block, bullish candle before our lower low.
Mm-hmm.
We're expecting price to pull back to the order block and drop. It broke right here, but then it
Yep.
whipped the previous order block, right? Now, with this gap, we know that every time the market gap is going to have to fill the gap. So this would be the move filling this gap
Right.
right here. You get what I'm saying? So
Okay, yeah, that makes sense.
now, if you made this your breaker, right, off
Mm-hmm.
of this, you would have been right. However, you would have still had your order block box up here because you still in the order flow. Follow
Right.
me?
Right.
Once you seen price rejecting this order block, it would have told me that all right, they still getting ready to push price down. You understand?
Mm-hmm.
Because this move right here was the retest to the order block. So it kind of
Right.
fell in line with everything else. You get what I'm saying?
Right.
Now within that, it gave you a range. They consolidated between two order blocks. You feel me?
Mm-hmm.
Before tapping the top, stop on high, drop. Last order block before your lower slow. We're expecting price to pull up to the order block, a sell off.
Broke it.
So we got a few pips that we could have caught right here, about 95 pips that day. And we could have caught about 100 pips that day, selling off of this order block, right?
Right.
After that last opportunity to sell, it breaks right here and closes. So now
Mm-hmm.
this becomes our breaker.
Yep.
And now this becomes our source. We expect price to pull back to the breaker or to the source and rise. It pulls back to the breaker, wick the source, and got out of there, right?
Right.
Gave you another order block. We expect the price to pull back to the order block and rise. It pulls back right here, throws you wicks at the order block and got out of there. Created another order block right here.
Mm-hmm.
We're expecting price to pull back to the order block and rise. Instead of rising, it broke the order block right here. This candle broke this order block. So now this is your breaker. All right, let's see. Try this further. So now it's your breaker.
Mm-hmm.
And then this candle right here would be your source.
Yep.
All right. So now coming from here, we expect price to pull back up to the breaker or the source and drop.
Yep.
It pulls back up to the breaker, drops, giving you another order block.
Is it?
We expecting price to pull up to the order block and drop. It don't do that. Instead, it just drops, gave you another order block, right? We expecting price to pull up to the order block and drop. Instead, it breaks right here, right?
Yep.
Making this your breaker. Then making this right here your source.
Yep.
All right. So from right here, we expect price to pull back to the breaker, the source, and rise.
Mm-hmm.
It pulled back to the breaker, gave you a wick, got out of there, wicked the previous order block, and then broke this breaker, and then pull right back to the source before they got out of there.
Right.
So this breaker price pulled right back to the source, and then it started to rise. You got a new order block right here, the last. So this push out of the source created this high. This is the last bearish candle before a new higher high was formed.
Yep.
We expect price to pull back to this break order block and rise. It don't, just get out of there.
Yep.
This is the last bearish candle before the new higher high. We expect price to pull back to the order block, get out of there.
Yep.
We don't get a pullback, it just goes up. Last order block, last bearish candle before the higher high.
Mm-hmm.
It broke right here, so now this is our breaker.
Yep.
This right here is our source.
Yep.
So with this break, this order block, you got your breaker and you got your source. We expect price to pull back up to the breaker or the source and drop. We get that right here, and then it drops, right? Yep. So you get another order block right here. Right, we expect price to pull back to the order block and drop. However, it don't. It breaks again.
Yeah.
Giving us another breaker, which gave us another source.
Mm-hmm.
So from right here, we expect price to pull back to the breaker or to the source and rise.
Yep.
It gave you railroads in the breaker and got out of there, and it went right back up to the previous source. And that's where we at. That's where we at today. All right. So going all the way back, right?
Yep.
These sources on your higher time frames are like support and resistance, like supply and demand zones. You get what I'm saying? So you see how you got a source right here, you got a source right here,
right?
And price travels from source to source. So it's in a range, but it's traveling from source to source. Once we created these sources, we have now different target zones.
Yep.
For the range. Now these are valid until it breaks. So once this happened, they broke this source. It violated the source. So now the next target is this source down here, right? So we used to zoom out. Take this. Drag it all the way over, right?
Yep.
Zoom out some more. So it broke this source right here, right?
Yep.
This is our lowest source. Look where price went.
Exactly, right to it.
Right to the source, right? Now on the way down,
yep.
On the way down, it made another source right here, right? So it came down, gave you a source and a breaker, came up, gave you a source and a breaker, right? Now, the next target or the next target zone is where you got a source right here and you have a source down here, right? So my next target will be my closest source, which would be this one right here. Which means if you catch a trade, you can swing this until this zone down here.
Exactly.
Right? Now it breaks this zone, wicks our lowest source, which our lowest demand. I guess that's the right word. Support. I use support. Right? Our lowest support, get out of there, create another source, right? It comes out of here and look where it went.
Right back up to the other source that was created, right?
Right back up to the other source and then fell off.
Start ranging.
All right. So now when you going through the charts and you marking up your order blocks, and you got your sources, you can trade and swing trades from these levels. You see how price reacts, right?
Yep.
On a downtrend, price is respecting the bearish order blocks.
Right.
On the uptrend, price is respecting the bullish order blocks. You get your breaker, you get your source, price is respecting the source until they violate it. So right here, this is where we at, right?
Yep.
Now, if you look at your TDI, your market baseline is over your stationary 50. You got shark fin, blood in the water down here. And price just left this source, right? So I would expect, right, just by looking at this right here, it would make sense for them to do something like this. Bounce off of that source, come down here, probably bounce off these EMAs and make a move up.
Yeah.
You get what I'm saying?
Hopefully.
The reason why I think the move is going to be up is because you have your 50 and your 200 just crossed, right? So now you're on a technical uptrend on your 4-hour time frame.
Yeah.
You got your 800 EMA in place, so they could be playing around and reset. However, your market baseline is over your stationary 50, telling me we're in the uptrend.
Right.
So, in the uptrend, price oscillates. The market baseline oscillates from overbought to the stationary 50, right?
Right.
So this could be a bounce off the stationary 50 with a rise back up to overbought.
Right.
You know what I'm saying? Now, we won't know until they make their move coming out of the Asian session. All right. But I have a feeling based off of this that they'll probably give you a push down, right? Bounce off these EMAs down here and then violate this source, creating another bullish order flow.
Yep.
All right. So now with these order blocks, you could play around with the indicators. So we go back to the beginning from right here. You go to your peak formation, hit OK. And then you want to add your 3 levels, hit OK. Now, let me take this off real quick. So your peak formation indicator, right?
Yeah.
It's going to place a star at peak formations.
Right.
Right. At different peaks. Right now, this will help you spot peak formations and could be used as an added confirmation, right?
Yeah.
Now, if you go and you add the 3s, this indicator, you only want to use this indicator on your 4-hour and your daily or your weekly, higher time frames only. 4-hour and up. You don't want to use this on your 1 hour, 30, 15, or you know what I mean? You're gonna get 3s all over the place, right?
And keep repeating.
So what this indicator is telling me right now is you have a level 3 and you have a star. So now you have a peak formation off. This is solely off the indicators, right? You have your peak formation indicator telling you got a peak formation right here. And you got your level indicator telling you on your level 3 should be going down. And you got a shark fin blood in the water at oversold. Not at overbought. Right. You got a star on your peak formation indicator. You got level 3. You got diversion, shark fin blood in the water, market baseline at oversold. Price should be going up. Breaker source, price should be going up, right?
Right.
You don't got a star, but you got a 3. You got a breaker source, shark fin blood in the water, market baseline there overbought. Price should be heading down, right?
Yep.
You got a 3. You got a shark fin blood in the water. Market baseline is over the stationary 50.
Yep.
It looks like it's oscillating between overbought and the stationary 50, so we could play a bounce off of this, off the 50 right here, right?
Right.
Breaker source, it should be buying. Price goes right back to the source. The indicator gives you a 3. Shark fin blood in the water at overbought. And your source, sell off.
Yep.
You got indicator give you a 3. You got your breaker, and you got your source. You got a shark fin blood in the water at oversold.
Yep.
Price goes right back up to your source. Indicator gives you a 3. You got a breaker, a source, shark fin blood in the water at overbought. Price sells off.
Yep.
You got a 3, indicator gives you a 3. You got a source, breaker, right? Well, you won't get a breaker right now. When you get this 3, you still on this order flow, this bearish
Right.
order flow, right? You won't get this until right here.
Mm-hmm.
However, right here, looking back, you have a 3, a breaker, a source, shark fin, blood in the water. You should be buying.
Right.
Where we at right here? Now right here, we got prices in the source, 3, shark fin. We don't got shark fin, blood in the water. We just got shark fin out overbrought.
Yep.
Price drops up. But you don't see how we don't have a lot of confirmations. Look how far it went before it
Right.
pulled back up the retest. You get what I'm saying?
Right.
Now this retest right here gave you divergence. So now once you get up here, you got a big multi-session M, multi-week M,
Right.
and you got divergence in your TDI,
Right.
right? And your source. So this is the pullback to the. After you got this breaker, we played pullback to the breaker, pullback to the source, right? It pulled back to the
Right.
source and gave you divergence, inline, sell off.
Yep.
Right? Now right here, you got a source, 3, shark fin, blood in the water. At oversold, price goes up. Here, you got divergence. Price comes back down into the source. You got higher highs on your TDI, and you got lower lows on charts. Divergence, price goes up.
Yep.
Right here, you got a 3, a star in your source. Shark fin, blood in the water. Market baseline out overbrought. Price drops.
Mm-hmm.
Right here, you got a 3. Right, price retested the previous order block.
Yep.
Shark fin, blood in the water. Market baseline look like it's getting ready to bounce off the stationary 50.
Yep.
All right, so let's see. So this right here, right? When you got your shark fin, blood in the water right here,
Yeah.
see how price bounced off the stationary 50
Right.
and it slowly rise?
Right.
That looked very similar to what's going on
Currently.
currently.
Right.
You get what I'm saying?
It's a fact.
That's why I believe that we should be looking for buys with the GBP cap.
Okay.
So now, if you go and you take your sniper zones, put your sniper zones on there, right?
Mm-hmm.
You're gonna notice something.
Line right up with your source.
Your sniper zones line right up with your source, right? So to confirm your sources, you could use your sniper zones,
Right.
right? And now you see you have a 3, a star, you have a bear sniper zone, shark fin, blood in the water, market baseline out overbrought. So that's 1, 2, 3, 4, 5 confirmations that this should sell off. You got a 3, a star, breaker source, sniper zone. You got 3, star, breaker source, sniper zone, shark fin, blood in the water, market baseline out oversold. That's 7 confirmations that the market should be heading up. It does exactly that. You got the 3, source, shark fin, blood in the water, sniper zone, breaker. That's 5 confirmations that you should be selling off. Right? So now you see how you can use these indicators, right?
Right.
To confirm the trend direction on your higher time frame.
Exactly.
Now, mind you, this is a week. This 4-hour time frame maps out a week.
Right.
So imagine if you caught this trade from. Imagine if you caught this right here, right?
And that's just in 2 weeks.
And you took this up to this peak,
Right.
right? You made
Right.
956 pips. Now, say you took price, right?
Mm-hmm.
Now, say you took price, you sold off, right?
Yep.
And you took price all the way to your previous source. That's another 900 something pips. So if you would have swung it, right?
Right.
Like say you was locked in saying I want to see price go back down here.
Yeah.
You would have got the money, got out the money, got the money, broke even, and then you would have ate. You would have ate.
Mm-hmm.
So if you was a swing trader, long term swing trader, you would have held the trade from here all the way down here, made about 900 pips, right?
Right.
Or you could have got out once you seen this action out here, could have bagged about 300 pips. Seeing that you went and got out down here, right?
Right.
Got out somewhere around here, would have bagged about 300 pips. Now you got another source right here, right? So if you sell off of this source, your target would be what? Your next source.
Exactly.
That's about 400 pips. Now, if you buy from here, you're oh shit. Hold up.
Mm-hmm.
All right. Now, my fault. Now, if you buy from here, your next target is what? Your previous source. That's about 300 pips. Now, selling from here, your next target is your previous source, right?
Right.
Comes down here, that's about 300 pips, right?
Violated.
It breaks that source. So say you got out, it breaks the source, right? Say you
Mm-hmm.
get back in off of the retest of the order block right here. That's a good entry.
Right.
Sell order, right? It's about
290.
290, right?
Right.
However, you got a source down here. So say your target was this source down here, right? If you didn't take profit right here, this breaker would have got you out of there, right here. So you probably,
Right.
if you didn't take your money right here, right, and you thought price was about to drop
Mm-hmm.
all crazy, and you got in off the retest, yeah, you would have been, this move right here would have got you out. This would have got you out. So you would have made 95 pips off of the breaker, right? So once you would have got your breaker, right, clearly this not gonna go down no more. You should exit your trades, and you should be able to secure about 95 pips off of this move up here.
Right.
However, it gave you what's up, man? All right, it gave you about 250, right?
Right.
Now, off of here, price heads back up. Now you don't really, well, you do really. Got this right here. Crazy, right?
It's a fact. We gotta respect him. Yeah.
Off of this source right here, right?
Yep.
Got that over, right? Now, you buy price right here. Your next target is what?
Source.
Yeah, you bought 330 pips.
Mm-hmm.
Off your source, you find an entry in here somewhere, right? So say you got in hand right here, right? And you swung it and you like ate this pullback, right?
Yeah.
The next target is the next source, which is right here, about 250. If you would have swung it and held it to the bottom source, you would have made 400 pips.
Jesus.
Right? So now with these indicators and these sources, it's giving you, now you know how to swing.
Right.
You know where you can swing at. You shouldn't be swinging from in here.
Mm-hmm.
Why? Because we don't know if this gonna turn into a breaker or not. So if you swinging in here, this could turn into a breaker. Now you just lost all your bread, all your profits. You follow me?
Right.
But if you take price from a source, that's a stronger level to swing from, because you know the next target is a previous source, right? So now we're gonna go to the 15-minute time frame. All right, before we go to the 15-minute time frame, we're gonna talk about the Fed, right?
Yeah.
So let's say the indicators of. So you understand how you could confirm direction with all those indicators, right?
Oh, yeah, I do.
All right, but now you also understand how you really don't need them, right?
Yeah.
Like you could do all this on your phone, TDIs on your phone. You could do all this on your phone. Your sniper zones is your source.
Right.
Yeah. Level 3, you could count 3 levels, and your peak is gonna come at level 3. So training your eye, you don't need indicators. However, using your laptop and using the indicators, I don't understand why people lose in forex.
Right.
Right. So now you got your source, you got your breaker, right? Now off the low to the top where they broke out of the order block, making this the breaker, I fib, right?
Yep.
My 3 lines, 1, 2, 3. This is my kill zone.
Yep.
Off the fib. Right, price broke out of this order block. Off the kill zone, it pulled right back to the kill zone, right back to the breaker, right back to the source, and get out of there. Prime time entry.
Give you a second chance almost every trip.
Right.
AK the second leg.
You got your low right here.
Yep.
Price broke about right here.
Mm-hmm.
You got your 3 line, 1, 2, 3, right?
Yep.
I'll get zoom in so we can see it better. You see it?
Yep.
Kill zone, stop on zone. All right. This is actually supposed to come down. All right. What price do? It comes right back to the breaker, hit your kill zone, wick your kill zone, got out of there.
Yep.
So you get, oh, we don't want that. We want this. The high. Then you take from when price broke right here. Right?
Yep.
Your kill zone off of this breaker right here
Mm-hmm.
is right.
Wicked it.
Nah, what happened was it did it in the future. This is your kill zone.
Oh, okay. You know what? You're right because I'm looking at the
Off of
swing.
this
That
right
happened
here.
before that, right?
Right?
Right.
So we don't get it pulled back to the kill zone, right? We get it pulled back to the breaker drop. We still valid.
Right.
However, after all of this, it pulls up to our retracement off of this source up here. So this is our kill zone from here.
Yep.
See that?
Yep.
Price goes right, wicks, retest the peak, close in a kill zone, and then get out of there.
Mm-hmm.
Way up here, right? So now we got our source down here. Price broke out of the order block right here.
Yep.
Came down and wicked the kill zone.
Yep.
Got the high of the order block. Broke right here.
Mm-hmm.
The kill zone is right here.
Right with it.
All right. Notice how price went right to your kill zone, retested the source, dropped off. Got source, breaker, right?
Yep.
Take the low, high when it break right here. Your kill zone, all right here. Price came right back to your kill zone. See that?
Yep.
Right here. Price came right back to your kill zone, retested the source, shark fin, blood in the water, and got out of there.
Yes, sir.
You got breaker source. Take the high. Where is that at? Right here. Take the low where it broke at.
Yep.
And you have your kill zone right there. Price went right to you. Click the kill zone. You have your source breaker.
Yep.
You take the low. It broke right here.
Yep.
And now you have your kill zone right here. Right? Now, check this out. Let's zoom out. I marked up your kill zone entries, right?
Yes, sir.
So if you want to swing a trade, you want to swing this. You want to swing this entry right here. This is your entry to trade. The swing, I mean, about 800 pips. About 360 pips. About 360 pips. Now, mind you, I'm taking all these trades to the previous source.
Right. Not to cut you off, bro, but what's your time looking like?
I think we got it. I think we still got it.
All right, bet.
250. 250. About 340. All right. Let me see. I don't even know how to see the time. Yeah, when did we start the meeting?
All right, so you sent me the info at
At 9:10.
yeah.
So,
All right, so it's about that time.
all right, so bet. All right, so we're gonna stop this video and then I'm gonna start a new meeting and then we're gonna go down to the 15 minute.
Bet it up.
All right.
Yes, sir.